Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Wednesday, May 12th, 2021. I wanted to get one more video out today and just update where we're at in the markets, and as well as highlight some of the recently highlighted trade ideas, do updates, I should say, on the recently highlighted trade ideas, and then also share a couple more. But of course, we'll start out with the markets. That's you want to align your trades with the market. There's QQQ solidly below trend. We broke that primary trend line, and so let me just kind of start out by saying, remember, this is bigger picture stuff. Yeah, I always go over the micro levels, I call them, support levels on 60-minute charts, things like that. But as of now, we have some pretty good sell signals. Even the S&P 500 is well below trend right there. And my job is to point out levels that that could come into play, important levels. And it's the way it works here is I point out these levels. For example, this yellow line is a 50-day moving average. You can see that 50-day moving average has done a really good job, especially since this last these last couple corrections of defining pullbacks, or containing pullbacks, I should say. In other words, acting as support. Now, I will say I put a higher weighting on the trend line break, but again, there's support right there, and so we're looking at levels we may bounce, and how far the bounce goes and whether you decide to play them, that's up to you. My preference, especially if you're not a very active trader, is kind of sit tight if you believe that we're going down quite a bit more. And based on these sell signals, there's the S&P 500. Remember a few weeks back I said we need to see the equal weighted S&P 500 break as well. That's RSP is an ETF that tracks equal weighted, so that's broken down. The Wilshire 5000, if there's any one single index, it's most representative of the whole market. I often say the S&P 500 because it does a good job, but with the S&P 500 you only have large cap companies, and that's although they make up the bulk of the market cap. If you add up all the shares of stock, that's your market cap in the entire stock market. There are a lot more small and mid-cap companies, quantity-wise. So, and they're important as well. And so there it is. There's a breakdown on the Wilshire. So, yeah, anything can happen, and sometimes you get these breakdowns, especially when you're in relatively close proximity to key trend lines, and they prove to be whipsaws. What will help firm up these sell signals? Well, close on the weekly charts. Let me just tweak this trend line right here and put it right like that on the S&P 500 to see something like that get taken out. QQQ weekly chart here. We already took out the trend line on the weekly quite a while ago. We have a secondary trend line there. But let's go down to the 60-minute charts and look at near term. I don't have a line right here, but I could put one in where what I'll show you is this is minor support. I'm not going to add a line there because I think any reaction will probably be fleeting, but we are coming up on support on the S&P 500, and so that line should be a hair higher, right about where we are so far. And why did I put that line there? Well, I have a line there on NQ, the Nasdaq 100 futures. I'm going to show you that here. Well, let's just jump to that. Remember that 12,993, call it 12,994, has been there a while. That's been one of the price targets to the downside, a support level, defined by these reaction highs, these reaction lows, reaction high, reaction low. And it's more of again, a minor support level where we could bounce, and we need to pay attention to this positive divergence here on the 60-minute chart. Unconfirmed because these indicators are pointing lower, especially that PPO. But if it turns up and they rallied here, well, we have the potential to put in divergence. The tough part about it is deciding which divergences to go long on and which ones not to. Somebody mentioned something yesterday in one of the comment sections about QQQ having divergence, and it did at the time. This is a 60-minute chart of QQQ. And I posted my thoughts in response to that. I said, look, I'm going to override that. There are times, and you can call it confirmation bias, call it what you want, but I said, yeah, I acknowledge we did have, and we still do on the RSI, some positive divergence there. We had it yesterday right here on the PPO, but I said I think it would be burned through. So I was choosing to ignore it and not, close all my shorts and start going long for the next leg up, which has been, the MO for a while. Why? Well, I said because we came off, we're just coming off, we're just on the heels of a much larger divergent high after an uptrend, and we had just also fresh off some pretty good sell signals on cues, and that's why I suspect these divergences will be burned through and will continue lower. We may have a little hiccup here, but I have some, again, I'm starting to focus on out more to the daily chart, and those targets there, 310 and a quarter, 297, and then on SPY as well. But I'll keep updating the 60-minute charts and show you levels we may bounce. There's not a whole lot of support on the SPY other than that 50-day. And we have ES, the S&P 500 futures. They're coming up on the first target. Remember, depends on which sell signals. I gave you a minor sell signal here, but I said that level wasn't as important. Then we pushed on, made a marginal new high. This was the big level I've been watching for a long time, waiting for a sell signal, 4100 or 4104 there, and we clearly have that. So that's that sell signal. It puts the S&P on a breakdown as well as the NASDAQ 100. So I have my first target or minor support here at 40.55. And we certainly could get a reaction there, but I'd almost put it below 50% chance of a decent tradable bounce. Why? Why is that? It's obvious support because we've just started breaking down on the more significant daily time frame. As I showed you earlier, a lot of the sectors have either broken down or were about to, and since that last video have. And so what happens usually then, it's like trapped rats. You get a rush for the exits here, a crowded rush for the exits. Too many longs. They realize, ruh-roh, this isn't just another pullback along the way. Stops start getting hit. Shorts smell blood in the water, they start piling in, and you tend to get a pretty quick move. So that's where I think it's going to happen. So those are my thoughts. Let me roll into some trade ideas for you. There's a couple out there. Hertz is up today. Hertz was one of the Reddit group's favorites. They've been pushing this one hard. See that HTZ was a symbol for Hertz, and they went into bankruptcy. When you see that GQ, they filed for bankruptcy protection, but the stock, unlike most in bankruptcy, has only been going up. And again, it's been pumped and promoted by the Reddit group. Today there was some news that they had some funding from. Let me grab the headline. Here it is. Hertz gets a 1.65 billion bankruptcy loan from Apollo and others. Yada yada. You can just Google the headlines, look for news headlines today on Hertz, and that's the reason for the 60% pop today. But one of the things in there, a couple things. Number one is, you read the fine print that deal. Is part of the deal, the company must file a Chapter 11 reorganization plan by August 1st. I'm willing to bet, and did so with some what I call Vegas money, a small position, just shorted Hertz right before the video here, that will wipe out a good deal, possibly all of the shareholders' equity. And so when you look at it, okay, let's just say everything works out hunky. Oh man, I'm sorry, I'm victim of the pause button issue I've been having lately. So I was just talking about Hertz, and I don't know where I hit the pause button last. So if I didn't mention it, Hertz, very aggressive trade, objective short here, right around that 640 level, right around where we're at now. Well, we were there a little earlier. I just shorted it right before the video, and I'm going to swing it down here with a relatively tight stop just above about 645 there, and swing it down here to that 350 and uptrend line support. Again, I may have covered this. I don't know where the pause button was hit. That's my target. Depending on what happens, I may just set a stop and let it run. What I was trying to do earlier, and I don't know if it came through, is show you the headlines today. They got a 1.65 billion bankruptcy offer, a loan, I'm sorry, from Apollo, and they still have to. Part of that deal is they have to file a Chapter 11 bankruptcy. Gosh, trying to talk so fast. I want to get the video out to you guys before it closes, so let me just slow down a bit here. They must file a Chapter 11 reorganization plan by August 1st, and I'm betting that's going to probably wipe out some, if not all, of the shareholder equity. But we'll see. I don't know the fundamentals on this one, but I do know, as I again don't know if I covered this. Here's where we were pre-pandemic levels, and Hertz has regained most of that. A company that's still plagued with some major issues, and that plan still has to be approved by the bankruptcy, the current bankruptcy courts. So there it is, reaction high. It's objective because you can short there at resistance, and with a stop somewhat above, swing down. That'd be about a 60% gain from where it was earlier. I don't know where it is right now, 587, I guess a little lower, to that 350 level in the uptrend line right there, target, and or maybe just trail a stop down and try to swing for the fences, because this one could be worth nothing down the road. Let me move on. That's very aggressive. I wouldn't put a lot in there. That's Vegas money only, small position size. The other one, other crowd favorite for the Reddit group, is GameStop. Saying this is ridiculous based on their fundamentals, because you have here's your pandemic right here. There's February, March of 2020. This thing is from where it was before the pandemic hit. It was priced for death then. It rallied as much as 7,800%, 7,900% right there, and it's still trading way up about 2,600% from where it was there. All right, here's my thoughts on it, both from a technical basis, technical analysis, meaning charts. I see a nice support shelf it's been dancing on around 149 for quite a while. I have a uptrend line here as well that was recently cracked, but again, it's holding this price support, and there's a downtrend line there. So I think this one's going to drop, and I think it could hiccup here, have a little bounce, or catch some support around 90.46. But I'm going to call this one down here to this trend line, and probably overshoot that trend line a little bit before it settles on it and bring it back to about 39.70. If so, you're talking a drop of about 73%. Okay, so that's the technical case. Just pretty much needs to break yesterday's lows to do the trick. But here's what I think will happen. If I am right on where with more downside in the market and a bigger correction to come, I think, and I talked earlier today and showed you the massive amount of margin debt out there right now. I think we're going to start to see forced margin selling. What happens when in a bull run, when everybody's bullish, and who's more bullish than the Reddit group? They buy crap stocks like this, and hey, more power to them. Those that wrote it up were able to take profits or not give back a lot. However, where we're at now is I have little doubt that a good percentage of those traders are buying on margin and probably their first foray into investing period and don't understand how that works. And here's how it works. If the stock market starts to come under additional pressure, more downside, one of two things happens. Number one, you get forced margin selling. There are other positions. Let's say you're holding GameStop, but you're holding other stocks as well, Apple and all the other crowd favorites. Then your margin equity decreases and you get a margin call. And your broker says either you sell some stocks to clear that margin call, or we're going to do it for you. And so that's what forced margin selling is all about. So that would probably pop this, put pressure on a stock like GameStop and take it down there and be the catalyst for the drop. And then add another point to margin. I believe that's what it was. But either way, again, that whether we get the drop in the market, whether we do or don't, whether we get a lot of forced margin selling, it's subjective. You short it with a stop somewhat not too far above, because there's a downtrend line that could be taken out, and that could cause a run up, maybe to back test this trend line there. But again, pretty good potential there. And again, a very aggressive stock. As you know, this one just has huge moves due to the followings. This was all about the battle between the professional traders, hedge funds, some of which blew up in that short squeeze, and then the other crowd. But again, from a fundamental perspective, this thing is just insanely overvalued, and that works great, holding and buying overvalued stocks in a strong bull trend. But when you finally get a correction, the ones with the most hot air tend to come down the most. So again, highly aggressive. Now let's just wrap the video up with some updates on some of the other recently highlighted trade ideas in the last few weeks, a few months here that I've given you. Marathon Holdings continues to play out, more downside since the divergent high. Again, I don't recall where it was exactly first mentioned as a short trade, but we had sell signals on Bitcoin and the Bitcoin proxies, and this one's down now about 61%. Still headed down, I believe, to at least this 1615 target, because we're now below that 2437 support / target, and that opens the door to the next one at 1615, and then ultimately my final target there around 1037 in the downtrend line. If hit, that should still give us another 56% downside on that one. All right, and I'm not going through in any particular order. It's just how I had this watch list sorted earlier by biggest gainers or decliners. Seed, I mentioned this one in here somewhere in one of the recent trade idea updates, and it's coming up now, getting real close to that 1081 target, so probably time to cover that. Let's see, WGO, Winnebago, this one was mentioned also in one of the short trade idea videos recently. There's our uptrend line, boom, breakdown, sell signal. We have a secondary trend line and some price support there around 73.60. There's our sell signal on the break of the primary trend line right here, these two red candles. That's our sell signal yesterday. Secondary follow through signal at support now, and I also mentioned a potential complex head and shoulders pattern with two right shoulders, and then that's the neckline there, and that's the measured target, which also comes in with my price target, even if I didn't have the head and shoulders pattern. So this one I'm calling down to about at least 60.88, and still plenty of meat left on that bone. At minimum about 18% or so drop. In the bottom of that support zone is 58.72. Signet Jewelers, that one has not yet triggered, but will most likely break down soon, along with everything else that's set up right now. Negative divergence, a little minor trend line break and back test. There's your primary trend line, and all these targets are marked. Let's just say 41.12, just right now being my preferred swing target. Next up, stocks. I've covered this one quite a bit lately. Semiconductors, red flag for the market, and tech in general. When semis break down, they broke the primary trend line there, back test a few times, put in a divergent high, and then broke my benefit of the doubt trend line the other day, last week, couple weeks ago, back tested and continues to move lower. Still headed down, I believe, to at least 366 on the semis. So more downside there likely means more downside in the market. Brunswick Corp, I pointed it out on recently, needs to break this trend line. We're right on it now. The only thing different, I must have pointed out shortly after this divergent high here, is we simply extended the divergence, and so nothing's changed. Sell signal pending a break of pretty much, we're on the trend line now, so much below today's lows should do the trick on BC, Brunswick Corp. Tupperware, I let it many times in this trading range. Wash, rinse, repeat. Short the top of the range, cover the bottom of the range, or go long at the bottom of the range. Most recently, just yesterday, right up near the top of the range again. So the closer you get to the top, it's objective to short. And sooner or later, this will break down, depending on what the market does. If it breaks to the downside, 1960-ish is the first target, and an upside break would be bullish, but based on what's going on in the market and based on this trend indicator right here, the PPO trend indicator, which is now bearish. Once that white line crosses below the signal line, as it did right here, that says the trend is bearish. The primary trend was bullish all back here, case to be long, and now this is why I favor the downside break, because that trend indicator is clearly bearish at this point in time. Tesla, I've covered this one quite a bit. Lots of sell signals since going back here. That was our first sell signal after the fourth quarter earnings report. And didn't mean to move that line, just trying to measure it for you. I mean, we've moved around. We already hit this primary uptrend line, but that was the most significant development recently. That broke down, as well as the 661.78 level, giving us another sell signal a couple days ago, and we're down since that one gave way about 11%. Coming right up on the intersecting 200-day simple and exponential moving averages. They're both flattened out together. That's this red line and the blue line here. But I think we still come on down here at least that 464-ish, 465-ish target. in the coming days to weeks. And do remember or keep in mind that stocks tend to fall faster than they rise. And if we're at where I think we're at, we should get to the point of recognition soon where people see realize that this is that some of those longer term trend lines are broken. Then we might get some more impulsive selling. Peloton, PTON, that one was a short here on a break of 98.68 a couple weeks ago. Still looking for a move down to at least 72. That's still the first target. Ally Financial breakdown's been back testing the trend line from below, putting in a divergent high, and still looking for this one to come back down to about 42.68. XBI Biotech. Somebody asked earlier today they were up. They asked why they were up, and I posted just reposted my chart. This chart, as most of these are timestamped, was posted on the site back on March 19th. Calling XBI, the biotechs, down to my first target here, 122.43 with a reaction on that level, followed by another leg down to 108. And that was then, and this is it. That's that same 122.43 level. We had an intraday break, but see how that's a green candle? I mean, it closed back on it, daily candle, and it was up today. So we had a reaction. We've actually had a reaction. I show you those arrows, and again, that was months ago, when we were back here, and so now that target's been hit. This is a reaction. A reaction can come in one of two ways. It can be a consolidation around a support level, which mostly this is, or a bounce. And based on what the market does, bottom line is you don't go long, you don't short the biotechs because they're at support. If anything, you buy the biotechs at support with the stop somewhat below. And it also hit this trend line too yesterday when we reversed. So where we go now, I don't know. They've corrected a lot. I think there's more meat on the bone on some of these other short trades I've highlighted. Again, if this one, if you took it back here from that 139.59 breakdown or sell signal, and you covered on the 122.43, you got about 12% there. So we could still fall, and probably will, depending on what the market does. We also can see this trend indicator is bearish right now. White line, the signal line. The yellow line is where sometimes I'll put a horizontal line and not use the zero line. Zero line's that dotted line there. I think you can see it in the video. Certain securities I like to look at and say, well, is it the zero line, or is there another level that tends to define bull and bear trends? And that in that case, that's what it was. And so we just had a back test and a rejection off there. And so most likely we'll probably head lower in the coming weeks to months on biotechs, most likely. UAN sell signal still pending a break of the uptrend line right there. That uptrend line is off the November 2020 lows. MOV broke this minor trend line, has that more significant trend line there. DXLG, this one was mentioned as a sell signal to break of this trend line. When it broke, the seller stepped in pretty aggressively, dropped the stock about 24%, but we snapped back, making a back test, and that, my friends, is an objective short entry. I can't guarantee it'll pan out, but I can guarantee you it's objective. You short either a breakdown, and if you were quick enough to get some of that 24% drop, great. Hit that 50-day moving average right there, reverse, back test. And so right now, where we're at as I do the video, objective short, but a low price stock, meaning very aggressive, Vegas money only when you're shorting a stock that's trading at $1.56. And again, it doesn't take a lot. You don't have to put a lot of money. If you normally put 10,000 in a position, you could put a couple thousand, $2,000-$3,000 in this, because if you hit the target, it's going to drop 51%. So on $3,000, you made $1,500, which is comparable to a 15% return on $10,000. Okay, and to wrap the video up, ES just hit support right there, 40.55. Again, that was the first target. We'll probably have very little, if any, reaction, is my guess. I think the last half hour of the day will probably be no bueno for the bulls, but we'll see. Let me stop it here so I can hope to get the video out to you guys. I have exactly 28 minutes before the market closes. These videos need to be uploaded, and then YouTube has to process them, and as soon as I can get them out, I do. This has been Randy Finney with Right Side of the Chart. Have a great day.